It would go to the president for his signature, allowing Washington to avoid a government shutdown at midnight tonight, as the House now has the votes it needs in order to pass the government funding bill. Back over to you.
Old news. Hey everyone, me Kevin here. So earlier I posted a video talking about the what's going on in Congress. I encourage you to check that out. So if you're curious about what the heck is going on, check out the video from today. It gives you a full breakdown of all of the things, not just avoiding the shutdown, but also what's going on with the debt ceiling, what's going on with the $3.5 trillion plan, what's going on with the $1 trillion plan. All of these things broken down in a concise manner in the other video. What's fascinating, though, is at the same time we're getting this news about the budget, passing or whatever, the House, we kind of already knew this. The S&P is actually rotating down a little bit here into the close, which we've seen this for the past few days in the stock market. It's actually been this entire week. It's just been sort of the MO of the market that you have a dip in the middle of the day. And the last 3 trading days, we've generally seen the S&P fall to levels as low as the middle of the day low right at the end of the day. Now, we've only got 20 minutes left to go, so we'll see. But take a look at that here. You had that middle of the day dip right here, that 10 o'clock dip California time, followed by sort of that 10 o'clock dip Eastern time. And we closed the day with a sharp sell-off as low as what we did the day before. That was yesterday. You go over here, same thing. You had that middle of the day, 10 o'clock dip, followed by, in this case, an 11 o'clock dip, and then a sell-off again going into the close, as low as what we had before. Go to Monday. And what do we have at Monday? Well, we have a chart that we need to zoom in on. That's what we have. Look at this on Monday. You have the morning dip right after the open. You've got the dip in the middle of the day right at 10 o'clock again. And then look at that. At the close, you're literally at those lows again. Like, it is freaky. Like, it is obvious that there is a lot of algorithmic trading happening here, that there's some institutional money that is executing trades at certain times in the day. But the fact that we continue to go to lows at the end of the day, as low as what we get in the middle of the day, is a quite fascinating pattern, in my opinion. So we'll see what happens today, but so far we have been consistent with this pattern the entire week. And in terms of being a trader, it's fantastic to know as a trader. So I highly encourage you to watch for this if you are a trader. No guarantees, but I would not be shocked to see SPY 230 here. Obviously, right now we're at about 432, so it wouldn't take but a 0.5% move in the next 19 minutes to make that a reality. Okay, so in the meantime, we have Hut 8 Mining up 7.8% today. A nice little recovery here. Virgin Galactic, after that FAA case was closed, up a nice 12.7%. Somebody please call paper hander Mr. Chamath. Then we've got AMC up 9.2% all of a sudden here, 38.8%. It's good for the hodlers. Affirm coming right back to 120. This is a really good test of the market here. That it seems like when a firm falls, it falls to right now that 108 to 112 level. That obviously could get broken, but looking at the hour chart here, we here recently had, it's still too early to really draw lines here, but we did get a test here to 112, 110, 112-ish, 113 again. So we're definitely testing in this area right now, as we have had some pretty strong run-ups here. Again, wouldn't surprise me after large run-ups to see a sell-off. I did, by the way, Gary Roberts make a video on exactly what Joe Manchin's demands were. So if you want to see that, make sure to check that video out. All right, so here, do you think hedge funds sell, then us retail investors buy up the dip, then hedge funds sell again at the close of the day? I think funds get forced to sell when their clients paper hand. I don't think that hedge funds want to sell, unless, of course, they have a direct strategy going in. But hedge funds, just like ETFs, they have to liquidate if their clients withdraw. And many clients are just full-on weenie babies, and they can't stand, not seeing stocks only go up. Which, wow, what a surprise. Stocks apparently don't only go up. But anyway, look at that. Dick's Sporting Goods down 4.85% as well, along with the Dutch Bros over here, Nordstrom. It's a little bit of pain in the markets here. But again, we're right now eyeing to see what's going to happen at the close. We've got Ethereum back over 3,000. Trying to find Bitcoin. I did buy Bitcoin, Ethereum, and Cardano yesterday. A little bit of a rotation down here now, but that was after a nice run up that we had earlier today, which is great. Back over 44K there, but now sitting at 43.6. Coffee break. That's level 99 range coffee right there. That's good. All right. LMND. Look at that. We got lemonade popping back off. Nice. It did a little bit of dip buying on the lemonade. We are now looking for some other opportunities. Let's see here. Virgin. Okay. DQ Energy popping up. Nice. How's Baba doing? Let's take a look at that. Baba up about 0.5% today. How are these Chinese stocks doing? Neo only up about 1.52%. I did buy Neo yesterday. I'm bullish. Enphase 143. So back up. Did have a little bit of red earlier in the day. I did also buy Enphase today. Actually, I bought it. I'm pretty sure I bought it right in the midst of the dip. I was at breakfast with Lauren. Let me see here. I bought Matterport in the dip. Matterport, right? Yeah, this is when we were at breakfast, 9:30. That's crazy. Yeah, we get to breakfast, and I just sat Max down, and I was feeding him some pancake. And then I look, and I'm like, oh, this is a nice middle of the day, 10 o'clock dip again. Don't mind if I do. Same thing over here on Enphase. I bought the 148 dip. As usual, all my alerts go out to those of you in the Stocks and Psychology of Money group. But look at this again, the end of the day sell down. So you might get another opportunity here again to go shopping a little bit. All right, so Twitter set to verify NFTs so you can display them on your account. Now that would be interesting. See, now you're actually creating some value, bestowing value. But if them verifying NFTs is anything like them verifying users, it's going to be a total fraud, total scam. Twitter demos potential Ethereum NFT verification system. Twitter NFT owners may soon be able to display their collection of digital collectibles while proving authenticity on Twitter. Software engineer working on bringing crypto and NFTs to Twitter demonstrated functionality that would allow users to add NFTs to their accounts. Oh, yeah? FYI, I'm currently working on some experimentation on integrating NFT and Twitter. First experiment would be to download your NFT from OpenSea and add it to your avatar and banner profile. I can send you a demo very soon. Yeah. I mean, working on an experiment, I suppose, is different than actually having something, but it is interesting. Let's see. Okay, there's really no other detail here. All right, whatevs. Okay, so that is very interesting, though. Do you think Volvo Polestar Chinese ownership is another bullish factor for Lucid? I don't really know if they're that connected, no. Palantir lost an ICE contract? Who needs ICE anyway? I'll look it up. Let me see. Palantir. I mean, that's how it works. You know, you get contracts, you lose contracts. That's called the nature of the beast. You don't only win. Palantir may lose ICE contract providing Falcon system. It just says may. Palantir may lose lucrative ICE contract. ICE has been buying Falcon, a data mining analytics tool that it's been using to organize. So, all right. What else we got here? Well, we have 13 minutes to the close, and we're going to see if this today going to break the cycle of the S&P selling down to the low of the day. And so far, since I started this live stream, the answer is no. The S&P is literally like, you can't make this stuff up. You know, it was just 10 minutes ago that I'm like, I wonder if the S&P 500 is going to sell off towards the end of the day, just like it did on Monday, Tuesday, and Wednesday. And we would literally looked at it happen on the other days. And it's like, it's always the institutions coming in to dump at the end of the day. And I personally enjoy it. I just hope some of the individual stocks go down with it so I can actually go shopping for something. But right now, Enphase is not doing that kind of dip beyond what I was able to buy this morning. Matterport's not playing along here. Affirm slightly playing along. AMC is slightly playing along. Nice pump, by the way. Look at that bounce off the line, folks. There's your technical analysis for you at work. You want to make money with TA. Here you go. Bounces right off the lines. All right, T-right desk. Yeah, not really seeing rotations to the downside. Fastly. How's Fastly been doing the last few days? Oh, Fastly's kind of continuing to get a rotate down here. I thought it was lower than that. Now, well. Hippo's up a bit. Piton, Win. Oh, Win actually went positive today. Nice. Let's look at the losers again here. We've got 12 minutes to go. Yeah, a lot of retail today. Retail. Robinhood, Playboy, Walt Disney, Poshmark. Palantir down about 155. Matterport. Okay. All right. Oh, and is Tesla down as well? Tesla's down 0.39 right now. Adobe down fractionally as well. Google, tiny little portion here. These have had some incredible runs too, though. So I don't mind being able to pick up some cheaper prices here. It's good, though. I like seeing dips like this. Very good. Dip more. Please give me some more discounts. I'm waiting, Spy. Let's see how it's doing. And down to the 1 minute. It's still going. It's still going red. So far, it's following the script. We'll see if it continues to crash into the close. Why are you talking about the big scale? Because I actually have a video coming up. Oh my gosh, get out of here, dude. Okay, I don't just spew videos without doing research. I've got the whole lawsuit and everything. It's coming. So thanks for your $10 to plant the seed of distrust and mistrust. It's not cool. Chill out. So, all right, there it goes. S&P falling. S&P falling. This is as expected. Is it going to go to a full 1% down? I wouldn't be surprised if it does. Technically, let's draw the line. Technically, we should bounce at 430. I'm going to delete this line later because it's really just like a temporary. It's not going. I don't think it's going to be relevant tomorrow. So let me just give it a crap color. There we go. Here we go. Look at that. It's going to it. It's kind of funny to see this. So it's literally the same thing every day this week. Oh, that's a joke. All right. How are some of these recos? Nordstrom's down 8 point. Look at Nordstrom, just evaporated. Nordstrom had this insane run to like $46, and it's literally giving all of it back, almost. It's still up obviously from its 11, but my goodness. Macy's. Yeah, Macy's has been incredible. They've really stayed up. Every time Macy's is red, it's like nobody cares. People buy Macy's. Like to people, like Macy's is just never going to go bankrupt. I feel like people look at Macy's like, oh, it's just the safety stock. Like, I'm not touching it. All right. So, okay. Oh, here's a headline. German police detain suspect, 96 years old, who ducked trial in Nazi case. Wow, 96. Got him. May have been 50 years late, but we got him. Like 60 years, no more. 60, 70. I mean, we're almost a century old on this news here. Not yet. More like 80. 75. But anyway. Okay, is the S&P going to keep going? So far, it's been behaving. Yep. 0.93% now. It's going to 0.1. It's almost there. It's almost there. This is the fun, in my opinion. You just need to get back to like scroll back to the beginning of this live stream and just watch it grow, just like we called it with the other days. It's patterned. It's a simple pattern. It's just weird because like it's happening live. I feel like most trading people are like, watch me do this in hindsight and show you how I'm an expert. It's like, yeah, let me see you do it live. It's not as easy when you do it live. It's really easy when you do it looking backwards. Everybody can look at a chart in the past. Everybody can do that. Lucid 3.27 to the downside. All right, let's try to get let's see what we can get here. Oh yeah, Kathy and her deflation arguments. Okay, let's see here. Mm-hmm. Okay, one sec. All right. So that's old news. We already talked about this. Yellen says Treasury will run out of cash on the 18th. We already knew that. That's old news. Moderna likely to get FDA approval for a smaller boost. Oh, that's interesting. Stocks selling off to a rough month end. Yeah, we know. Let's. Oh wow, is everything? Oh no, okay, not everything. Well, hold on a sec. CNBC. Yeah, everything is officially red now. That's priceless. Anyway, Dow is sliding. So stocks were, oh yeah, it is the end of the month too. Stocks were ending a rough month of September, largely with more declines as heavy selling action set in to close out the third quarter. Earnings estimates have also been declining as supply chain constraints persist. By mid-afternoon, the Dow was down 301 or 0.9%. Okay, let's see what rationale they give. Dow was the worst performer. Broad selling began hours after the opening bell, at which point stocks were still in the green. One major potential contributor, portfolio window dressing. That's when portfolio managers sell out of the worst performing stocks for the quarter to paint a brighter picture of what clients are invested in. I'm telling you, the business is a scam. It's just all like misleading people. It's crazy. Ay, it's the last day of the quarter. Some portfolio manager, you may want to sell stocks that didn't work that quarter. Oh my gosh. It's so short term. So freaking short term. 8 stocks on the move. Whatever. Okay. Cool. Boring. Tesla delivery numbers are coming. Wall Street expects a record. Ooh. There's just 1 day left in the third quarter of 2021. What are they expecting? Delivery estimate of 233,000. Ooh, that'll be interesting. Yeah, Luke, we already talked about that. That's old news. I got a video on it already. Oh, did the S&P hit the 1%? Let's see it. Let's see it. Live trading. Let's go. Boom! It touched it. Oh, that is too freaking funny. Now we got to go find something that's also selling down to those levels. Somebody find me something that's in the shout some ticker symbols where the stock is lower at the end of the day. Look at that. Tesla, lower at the end of the day. There's one. There you go. What's another one? Google. How about SoFi? SoFi, no, not at the low of the day. We have 4 minutes to do some shopping here. It's all good, Luke. Amazon's almost at that bottom of the day. This is so funny. It's just like the most predictable trade ever. It's hilarious. Apple. Oh, Apple. Bed Bath got wrecked. Smurf. Lol. No. Yeah, look at that on Apple. Apple's a little too pricey for me to buy right now. Oh, did Lemonade dip again to the middle of the day? No, Lemonade's doing fine. Lemonade's rallying into the close. Ooh, Disney 169. Oh, ooh, that you know what? I think that deserves about $30,000. Let's see here. $3,000, and can I buy it? How do I buy it? No, let me just do this. Buy. No. Why is it being funny? Let me use this one. Buy, please. How much do I want to buy? No, I don't want to stop. I don't know. How many shares do we want to buy? Oh, not that many. I don't know, like 200? 200 shares is 33,000. Heck yeah, let's go. Buy and Diz. All right, 169.35. Let's go. Remember, anytime I trade like this, I send notifications in Stocks and Psychology Money Group, link down below. But Diz at 169.35, 33K worth. Boom, let's go. Let's find another one. Let's go. Give me another ticker. I'm not going to buy Shift. Autodesk. I'm not ready to start a position in that, but I am so freaking tempted. Good call. Good call, though. Yeah. Yep. TDD. It is Friday. No, it's Thursday. Oh, I thought it was Friday. Darn. Okay. Trade desk. Come on. I need another ticker. Give me another ticker. Ticker. What's another one? No. AMD. Yeah, I mean, AMD is kind of at the low, but it is a green day. Anything else? Come on. We got 90 seconds. Matterport? Let's try here. Matterport. Nope, that one didn't sell down to the bottom. We saw the S&P 500. It's breaking the line. It's worse. Mind Medicine, Shopify, DraftKings. DraftKings got me really interested. I'm not going to touch Corsair. DraftKings. I'm tempted by Goog. DraftKings did a nice sell-off here too. You're right. Goog. I'm loaded up with Apple. Oh, that Google dippity. Oh, heck yeah. Let's go on the Googs. I'm about at dip 20 shares. Let's buy it. Boom. I got it. But Goog at what did I buy it at? I don't know. It's something like 2660, 20 shares. Boom. All right. 30 seconds left. That's a good. I like that drop into the close. Heck, that was a good one. Whoever called that one out, thank you. Sono, Amazon, Amazon. Yeah, I'm good. Amazon deserves a breakout here. It's just been on like, but I'm pretty exposed already. Oh, look, it's all red. Let's go.
This week, but they're both lower. As we were just discussing, the worst performing sectors today are cyclical in nature. Industrials at the bottom of the pile, down 2%. The consumer sectors are down.
All right, girls and boys, it appears that the Dow Jones is down 1.6%. The S&P 500 is down 1.22%. The Nasdaq Technologies are down 0.44%, and the Russell 2000 is down 0.94%.
Stocks taking another spill into the close, an ugly one to wrap up what was a down month for September. Welcome back to Closing Bell, everyone. If you are just joining us, I'm Sarah Eisen with Wilfred Frost and Mike Santoli, CNBC senior markets commentator. Take a look at how we finished up the day on Wall Street.
Nope, already did. Oh, dear. It's such a riot. The stupid sell-off it does right before the close is hilarious. So dumb. Yeah, they all did it too. Oh man, it's exhausting, but it's also kind of entertaining at the same time. BTC, USD. Let's look at how crypto did. Crypto didn't really move that much, and this is the 1 minute chart. Let's see here. So this is the end of the month, end of the quarter, end of the week. Stocks post worst monthly sell-off since March of 2020. Well, if you bought the dip of the worst monthly sell-off since March of 2020. Is that even true? Is the S&P down more than 5%? S&P 500? Monthly sell-off, though. So 1 month, September 1, 4.79%. Are you kidding me? Man, that's weak. That's just weak. Yeah, now we're back into October earnings. Quarter 3 earnings. We got nothing, obviously, yet. Not really, at least. But, yeah, I would expect 2 weeks from now, we'll be right in the midst of earnings. We'll get labor data on the 8th, which is a week from tomorrow. We've got, have I mentioned what yet, Eli? Reverse repos hit 1.6 trillion. I'm telling you, man, banks got so much freaking cash. They don't know what to do with it. People got so much money. That's incredible. That is crazy. All right. How's things moving after hours? Darden's moving up about 2.69% towards the downside. TMC and Win. Affirm. I just saw Affirm here for a moment. Affirm was up 5.64% today. I like that. That's very nice. Lemonade, a couple percent. All right. AMC did well today. Where's AMC? Hold on. There it is. 7%. Yeah, AMC finally bounced because the day was rough. It's down to $33, folks. I feel like it's dropped to 33 before, not that long ago. Hold on. When was it in the 30s last? Here it is. See, look at that. 32 in August. Yeah. There it is. That's crazy. So 31, 28, 29, 32 right there. We have seen this dip before. about 32. Didn't quite get there though, did it? Let me look at the 1 minute. Yeah, that's 37. No, not really. It didn't really quite get there. So I'm actually going to kill that one. Kevin, you mentioned in your videos that CPI affects crypto. The new report will be on the 13th. That is correct. That is right. You are 100% correct. All right. So write down the 8th for unemployment. You write down here we go. 8th for unemployment, and what was the other one? Oh, CPI on the 13th. Yeah, exactly. Cool. If I have not, folks, have you gotten your up to $70 for free yet from Public? Go to metkevin.com/public. Get up to $70 totally for free by signing up for Public. All you have to do is go to metkevin.com/public, and they'll give you a free stock worth up to $70. It's a super cool trading platform where you can buy and sell stocks. Public does not sell your information to other parties, and they don't use payment for order flow. Their social platform is also pretty fun, especially since you could see like transparently when people buy or sell, like do they sell at a gain or loss. Pretty cool. All right. And you have the choice to disclose that or not, obviously, which I suppose people could filter what they disclose, but whatever. That's on them. All right. So yeah, I mean, let's see. Oh, Beachbody. I don't know if it's actually up 4% right now. I could see it having some crazy fluctuations here. Matterport down about 1.64. It was about down 1% on the day. Did fall to about 18.28 this morning. Let's look at the SPY. SPY, we are look at that like recovery right after the close. We recover it. Look at that selling volume. It's insane. The last minute here. Sell, 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 sell. It is incredible. All right. Let's see what news headlines we've got now that we've closed. All right. Let's go back to Barron's. Barron's, Wall Street Journal, Financial Times. Let's see what we can find. Hey, I got the Financial Times right here. See? Financial Times. It's the same thing. Pelosi. Goldman Sachs was poised to triumph in China. What happened? China happened. Stagflation fears intensify. Ooh, drama. Goldman Sachs. Let's see here. Hold on one sec. Let's take a look at these. I think these will be interesting. Goldman Sachs was poised to triumph in China. What happened? Let's take a look. For Goldman Sachs, taking full control of its Chinese joint venture was meant to be the culmination of 30 years of work and a ticket to future riches. 100% ownership of our franchise on mainland China. Yeah, that's because a lot of companies are established in China, and then they're required to give a share of company ownership to the Communist Party. 10 months ago, Goldman's position in the country looked much less secure. In June, the bank was the lead underwriter on the disastrous Didi public offering. In August, rival JP Morgan leapfrogged Goldman to become the first Western bank approved to own a Chinese security business, right? Meanwhile, investment banking opportunities have dimmed as Beijing cracks down. For decades, Goldman has cultivated relations with China. Former executive Hank Paulson flew to China in 92. Okay, this is just more of a history here. I want to know what happened. A bitter IPO. Yep, we know Didi was an oopsie doopsies. After Didi's flotation, new rules were announced forcing any company with more than 1 million customers to submit a review of its data security before listing overseas. At the same time, U.S. economic sanctions on China and an unexpected confrontational Biden are becoming growing compliance problems. Yeah, that was unexpected. I think people were expecting things to get better with China, with Biden. Navigating the world is somebody that they interview. Okay. More history. This is a big research piece here. Managing clients hasn't been easy. A person close to the bank said that Ant had barred its underwriters from working with competitors. Yeah, okay. A little bit of a niche article there. I don't know how interesting that is. Instead, let's try something that might be a little bit more interesting right after a sip of coffee, because who doesn't like coffee? Ah, yes. Makes me really want to start a business in China, said no one ever. Payday tomorrow, please stay red. I love it. Good for you. See, that right there is this is the psychology that we need. You know, you get all the sometimes people paper hand. They see like, oh my gosh, my stock's down 10%. I'm a paper hand. It's like, are you gonna cry over 10%? Oh my gosh, you haven't lived. You haven't lived until you felt 40% declines to 50% declines. You haven't lived until some of your options have gone to negative 99%. You haven't lived. You have not felt true joy. Oh, dear Lord. Yeah, shift is getting tempting again. I do think the market's kind of shifted against shift because there aren't enough used cars. How are you going to sell anything when no cars? It's a little bit of a downside. This is nothing. This is who cares? Who cares? There was no mention of this on the news today. Of course, there was no mention in the news today about a bill to federally legalize marijuana approved by Key House Committee. Nobody cares what the House wants to do. Literally, nobody cares. Like, if you hear House wants to do something, like, just immediately go, yeah, okay, keep scrolling. I hate to say it. That's just the way it is. Like, if the Senate ain't going to do it, it's all virtue signaling. It's all garbage. It's all just kicking and screaming to try to get attention, and nothing's going to happen in the House. The only thing that matters right now is the Senate. That's how it was during the last 2 years of Trump. That's how it's going to be the first 2 years of Biden. It's probably how it's going to be the next 2 years as well. It's all about the Senate. So anything you see with House, even when they pass the Safe Banking Act, ooh, it's not going to go anywhere. So anyway, let's talk about something more interesting, like stagflation fears intensify in signs of slowing growth. Gas prices up. Oh my gosh, 135 of some currency for regular unleaded. All right, let's see what we got. Supply chain disruptions sweeping major economies have reawakened an old nemesis for investors, stagflation. Anxiety over rising inflation has been ever present in markets this year, but with oil topping $80 a barrel, global food prices a third more expensive than they were a year ago, and other commodities at decade highs. Investors say a longer than expected inflationary surge is coinciding with a slowdown in growth and making it worse. Hey, this is interesting. I mean, they're all right. The UN just put out the report about food prices going up 33% year over year. That is a tax on poorer individuals or households that aren't millionaires, certainly, right? It's just crazy. Okay, so economists and investors play down comparisons with the aftermath of the 1970s oil shock. A lot of comparisons to the 1970s. Even Kathy Wood has compared to the 70s and said things like, "This ain't the 70s. This time's different." Investors say longer than expected inflationary surge is coinciding with a slowdown in growth. Then in the 1970s, inflation and interest rates ran into the double digits, unemployment soared, and the GDP recovered only slowly from repeated setbacks. But with energy bills now rocketing, many worry about a growth slowdown at a time when central banks are edging towards lifting rates in a bid to keep a lid on longer-term inflation. Conversation around inflation has definitely shifted. Well, yeah, no kidding. Okay, so you got energy prices going up, you got food prices going up, you've got the economy slowing down because the stimulant is starting to wear off. We'll see what kind of side effects we have of all that money printing. Signals from the Fed and Bank of England last week were that they could soon begin lifting rates. Let's see, fueled a big bond sell-off, which increases yields, of course. But in contrast to the reflation trade at the start of the year, stocks have been unable to draw comfort from the prospect of tighter monetary policy. That's true. Recovery stocks started selling off, and which were often deemed the deflation or reflation trades, and tech has been selling off a bit. Everything's just selling off a little bit. All right. Ample evidence suggests that a supply shock reverberating around the world, combined with other outbreaks of Delta, is tempering growth. I'm not so. I mean, how concerned is everybody about Delta? I mean, I think widening. I mean, there was actually a headline. I don't know if I have it here, but there was a headline in the Financial Times about how basically Europe. Yeah. Here, it's right here. Okay. Eurozone consumer activity returns to pre-pandemic levels. And I thought this was a really interesting piece. I wasn't really going to talk about it because I just read this stuff all the time and I don't talk about everything that's in this stuff. But it's literally the front page news right here. This is today's paper. It says Europeans are shopping, eating out, and traveling and visiting cinemas as much as they did before the pandemic in a sign of returning consumer confidence across the Eurozone. Data on economic activity in September suggests that consumers feel emboldened by high vaccination rates despite worrying economic news, including higher energy bills, supply chain disruptions, and fears of a slowdown in China. For now, data remain consistent with a decent pace of recovery. Some of the rebound is because schools are reopening, but an increase in leisure activities also suggests consumers are now more confident. Cinema revenues have already returned to pre-pandemic levels. I am shocked by that because when I go to the movie theater, there aren't that many people there. Let's see here. OECD Weekly Tracker of Economic Activity, which uses real-time high-frequency data indicators, rose above 2019 levels at the beginning of September. I mean, that's good. That's bullish in Eurozone. Positive momentum might give the ECB confidence it could scale back emergency stimulus. Yeah, we've already talked about that back from the brink, but not out of the woods because of supply bottlenecks. So I think the consumers are there. Consumers are interested. Yeah. So, okay, let's go back to the FT over here. Okay, data released pointed to a sharp slowdown in Chinese manufacturing, regulatory pressures. A lot of the negativity has like a reason, and that's a good thing. It makes me feel more comfortable. It's like, okay, people are complaining about Congress or complaining about China's regulation and Evergrande, which is really a symptom of the Chinese Communist Party changing their regulatory stance towards debt. So far a lot of these things are very explainable, and it makes it really hard to consider that, oh no, stocks are somehow destined for a big mega collapse or whatever. I mean, hey, like, you never know. I mean, nobody saw the pandemic coming except when it started happening and people got rich off puts when it started happening, which makes sense. I mean, that's one of the first things people do when the market's crashing. I was just spending my money buying the dip. But anyway, selling activity spilled over into equity markets this week after data showed that U.S. consumer confidence had dropped to a 6-month low. The UK found itself at a sharp end of stagflationary concerns with a surge in energy prices. Okay, so it's interesting how confidence, I personally wonder how much consumer confidence in the US is based on what the stock market is doing. Because even though we've seen some economic slowing, there are a lot of indicators, especially Europe, which seems to be a little bit ahead of us in terms of COVID, that people are spending again. So it's always weird to try to tie this all together. Because on one hand, we've got more cash than we've ever had before. On the other hand, I believe we're going to be in a little bit more of a frugal decade because I don't think people are going to spend themselves into oblivion like they used to. The European Union, while we're having some setbacks with energy prices, is actually doing very well in regards to consumer activity. But then you have consumer confidence measures in the U.S. a little low, maybe because of Delta and all this other congressional nonsense. But I expect that to U-turn. So we'll see. With revised data, show activity, while revised data show activity bounced back faster than thought over the summer, the recovery appears to be faltering, at least in the Bank of England. So you get these mixed signals. Both of these are from the Financial Times today. On one hand, they're saying Europe's doing better. Now here they're saying the recovery appears to be faltering, according to the Bank of England, but it's because of supply bottlenecks. So these are two different things, right? So it's like, okay, yeah, supply bottlenecks are getting worse, but people want to spend money. This is more important, in my opinion, than supply bottlenecks. Now, supply bottlenecks are going to have a more immediate term impact on stock prices. Like, supply bottlenecks are going to suck. They're going to hurt stock prices. They're going to hurt GDP growth. But consumers apparently have the willingness to spend. And this is good. Recovery takes hold. Leisure rebound suggests confidence. But, of course, you have threats. Energy prices, supply chain shortages, price increases. So it's like people want to go back to normal. But, yeah, there are some headwinds. This makes sense. Makes a lot of sense. I mean, people want to buy a Tesla, and they don't want to have to wait until March for one, but they will because they want a Tesla. Concerns over growth are one reason the pound has not benefited from the sharp rise. If it's stagflation, central banks are in a bind. Hiking interest rates will reduce demand, which will slow growth. But if you're already slowing growth through stagflation, then that's bad. That's if you believe in the deflation or stagflation narrative. That's probably the biggest argument for a market crash right now is stagflation. That's it. The economy is going to slow down its growth, and at the same time, we're going to raise rates and we're going to be screwed. But the only reason, in my opinion, the economy is growing slower is because there's this giant anchor behind us, and it's an anchor of many different things. The rent crisis, the high amount of unemployment, as people transition to different jobs, supply chain shortages, shorter term inflation, right? All of those things are like this giant anchor. And consumers are like, we must move on and keep going. It'd be nice to cut that anchor. So inflation should start to ease in 2022, and the situation was still a long way off anything like the 1970s. We won't see inflation get into the system like we did then, says Vicky Redwood, a senior economist or economic advisor at Capital Economics. Others warn, however, that there is no signs yet of strains on supply chains easing, and that the world could be heading for a more sustained period of tepid growth and high inflation. So that's really it. It's basically what we're saying here. If supply chain problems continue for a further 6 to 12 months, while consumers still had job security and were willing to pay for goods they wanted, he said, the whiff of stagflation might be more of a stench. Wow, that was a complicated way to word that. Okay, got it. So basically, look, consumers are happy. They want to get back to normal. They want to go back to traveling. They want to go to restaurants. They want to spend money. They've got more money than ever. But again, we've got this giant anchor that we're dragging around called inflation because some prices are going up. Supply chain shortages making us wait longer. We either have to pay with our time or we have to pay more money. Remember, you pay more money for things like shipping costs to get the stuff on time, or you pay with your personal time because flights are getting delayed or hotels are booked up or whatever, right? But overall, I don't know. I'm not a big proponent of this whole stagflation thesis. But then again, I've been very consistent on this channel that I believe inflation is going to inflect down, whether that's next month as a start or in 4 months from now as a start. We are going to inflect downwards on inflation. But sure, supply chain issues are a crisis, and at some point they'll be up and running again. I just want to ask you this, and this is a great way to leave off. How do you think, with how much more productive our markets have gotten, our economies and our businesses have gotten, the cheap credit our businesses and our markets have gotten, how do you think our economy would be doing right now if we had zero supply chain shortages? And literally ask yourself that. How would the economy be doing right now with the amount of money people have, the appetite people have to spend, and no supply chain shortages? Would we be at all-time highs on the stock market? Would GDP be at the highest place ever? And so now, picture that moment where businesses are more productive, people have more money, and people have more willingness to spend. Just not now. Picture it at like the end of 2022 or 2023. That's what I'm investing for. I'm looking at 2021 as like, I'm planting seeds, man. I'm planting seeds. I'm going around going, yep, buy that, buy that, buy that, buy that. So I think it's hilarious when people, like, after a week of me saying, I'm going to buy I'm going to do a fundamental play. It's like, how come it hasn't gone up 30% yet? It's like, well, there are different ways to invest. It's not all Camber Electric, which I had tried to short sell this morning or buy a put on, but I couldn't. I'm sorry. I might do a video on them, like a standalone video. But anyway, think about it. All right, folks. Appreciate you being here. We will see you in the next one. Just make sure to go to metkevin.com/public to get yourself a free stock worth all the way up to $70. Metkevin.com/public, and we'll see you in the next one. Thanks again. Goodbye.